When it comes to money, we all hope ours is managed by a safe and responsible company. With so many options out there, how does a person know where to turn? Your first choice are credit unions, where you're both a shareholder and co-owner once you become a member. Your second option is a bank, which is owned and controlled by private stockholders. Customers have no voting rights or any say in how the bank is operated. This is pretty different from members of the credit unions who are actually buying shares of the company when they deposit their savings. But there are plenty of good things about banks as well. For instance, when you deposit money into a bank, you're federally insured up to $250,000 by the Federal Deposit Insurance Corporation.
Excuse me, I couldn't help it over here, but don't credit unions also offer $250,000 worth of insurance?
It's true, credit unions are just insured through a different federal insurance company, the National Credit Union Administration.
Okay, well what about loans? I've heard with larger banks you can get much better and faster loans than with your local credit union.
Wrong again, I'm afraid. Credit unions often allow for greater dividends and loans with interest rates as low as 1%. On top of that, you can pay one lump sum to pay off the loan early, dismissing any interest that could have accumulated. Banks will actually penalize you for paying your loans off early, often charging you with a higher interest rate, processing fees, and increasing the cost of your loan.
So the early bird doesn't get the worm? It gets fined?
That's not the only thing that the credit union cardinal misses out on. Those banking birds also collect profit at the end of the year and distribute it between the directors and shareholders in the form of dividends. Since the directors are the majority of the shareholders, there's less people to divide the profit.
Great, but if every credit union subscribed member receives a dividend based on their shareholding, how does the company stay in business?
Excellent question. Banks are profit-oriented organizations, so they exist to earn money for stockholders.
And credit unions?
Credit unions are not-for-profit financial cooperatives, for they exist to serve members rather than to maximize corporate profits. While there's still a lot to learn about responsible financing, it's important to recognize the pros and cons of any financial institution. With college tuition coming just around the corner, I'm confident and I know who to trust when it comes to my financial future.